Welcome back everyone to theCUBE's coverage here for 3 days. Robotics and AI leaders all coming together for 3 days here in our Palo Alto CUBE studios. Of course, we got a big event tonight with NYSE Wired community, theCUBE plus NYSE, bringing all the leaders together halfway through the year. Lots happened in AI this year, and we got a great power panel of investors who are going to break down what's going on in the market, where the money's being deployed, and where the value's created and extracted. Got a great guest, Aileen Lee, founder and managing partner at Cowboy Ventures, famous for quoting unicorn, decacorn, and really identifying the wave of startups as it came onto the market. Aileen, thanks for coming on, appreciate it. We have Dai, who's the founder and managing partner at Sancus Ventures, and Xu, managing partner, Amino Capital, CUBE alumni. Thanks for coming back on. All right, let's get into as venture investors. The world has changed. We're seeing a once-in-a-generation shift with AI infrastructure. I just interviewed the head of Amazon Web Services who runs all the CapEx. They just dropped 30 billion, I think 50 billion, they added another 20 billion to the mix. Large scale data centers, you're seeing enterprise AI booming. A lot of the data is locked in databases. That unlocking's happening. The young startups are coming in. Seasoned systems people are coming out of the woodwork. So you have the old school operating systems thinkers, as well as the young guns. So the market's changed. So Aileen, talk about the dynamics, because writing checks now, we're hearing more and more it's difficult to identify that next big company.
It is, it's really exciting. We are, I think probably in the first or second inning of a massive platform shift. But for those of us who've been around for a couple cycles, you also know that it's not a one-year shift. Right, it's kind of a 5 to 10 year shift. And if you look at kind of .com or mobile, for example, right, there are many early winners who did not wind up being the long-term winners. And so, you know, it's really important to be in the market, to be spending a ton of time with founders, to be following as the technology is evolving, but also you have to be quite picky, because there is, it's a gold rush, right? And so things are, and there's a lot of money chasing momentum. So it's challenging, but keeps us on our toes.
Lake, we were talking before you came on that you're also at Carnegie Mellon as well. I forgot to mention that. You see a lot of talent coming in. You mentioned a comment about the younger founders. You and Aileen were talking about kind of the seasoned playbook, and then also now high schoolers are looking at doing, and it's also the talk we hear I think solo founders will happen, but I don't think it's going to be as prominent as people think. But the ability to create value is so fast. You could be in high school and have a unicorn.
I think it's a very exciting time. So actually, to start with, so my fund, Sancus Ventures, in the past, we invest a lot of experienced founders. Actually, over 70% of founders build companies, and we have over 20% of founders have built unicorns. So the founder profile I used to look at are actually more the experienced ones. But what's interesting is now not only the infrastructure building has really enabled a lot of new founders to build a company at much lower cost, much higher speed, and faster to revenue. But also, I think because the new tools and Gen AI, how it changed our lives, the young founders have a blank canvas, so they can think very differently. So when we look in the future of AI applications, there are two schools of, I would say, potential winners. One, the one deeply understand the industry, but then the other type, I think, is, well, because there is no baggage, they can think really fresh. Right? So if we think about Uber, you know, if we just size the market as a taxi market, you would never think about how you're going to, you know, size the market for Uber, and same as Airbnb.
They don't have the dogma.
I won't be surprised. I mean, actually, one thing that I think a lot of us are waiting for is AI native consumer companies. We haven't, I mean, obviously ChatGPT and OpenAI is largely a consumer company, but, you know, oftentimes when you have these platform shifts, and I think younger founders who don't have all that kind of like knowledge of legacy are going to be incredibly well positioned to build some really exciting new consumer products.
It's interesting. That's a great point. I was riffing on my podcast a couple of episodes ago around today the hot area is enterprise. And if you look at all the young guns coming in, they're doing enterprise startups. And we see that in New York, because I asked one of them, hey, you worked at Palantir, Facebook, and like, what are you working on? Oh, I'm working on this data pipeline. I'm like, what? You go, who's your customer? Well, it's like 20 customers, 1 block radius from here. They're into the enterprise, right? It's like, okay, but then it's like, okay, what's the consumer hit? Who's going to reinvent a user experience at scale?
I think it's going to happen for sure, and it's probably going to be college students and high schoolers.
So I think there is a reason, like if you look at, so take YC Demo Day as an example, like out of 140 something company last bench, there's only 6 of them were consumer. And majority of them are actually enterprise. And then I think it makes sense because oftentimes, like you actually have SAP and then there's like $50 million contract and you have to hire like Accenture and that's another $2 million. So it's really hard for SMB to take advantage of ERP or even CRM. Yeah. But today with MCP and a lot of agents, and you can actually just spend like $5,000 and you can use different agents because for ERP, every stakeholder can actually jump in and then to actually disrupt this workflow. So it's not like Zoom, right? So-called, I think in 2022, everybody says, if this company is not PLG SaaS, I'm not going to invest, right? But right now, ERP, it's kind of like a, like PLG SaaS. Exactly. So, like it's just $5,000 and even just the, small startups or even small groceries, they are able to use ERP. It's amazing.
It's interesting, I was at a venture event, I won't name the name, but they were saying to the founders, young founders, go out there and replace Salesforce. Now, I was the position of, Salesforce is hard to get rid of because they're nested in there, but that's the mindset of the younger generation. Why do we need Salesforce? Yeah. I can just build that. Yeah. And you're starting to see that kind of mindset creeping in, this generational shift, because their value is, I don't need the newly old playbook of the picks and shovels. I don't need to sell software to taxi companies. I'll just be Uber, right? Yeah. So why would I do that? Or if I can change the user experience. So the question to you guys is, as you look at startups, we're now getting into the business transformation conversation, not digital transformation, which is kind of a tech thing. Yeah, go big or go home, that's still in play, I would agree with that. And so I want to ask you guys, what is that view? Because there is business value that you can serve a transformation project at an enterprise or an existing company, or full transformation for our lifestyle. So these are the kinds of things. What's your reaction to that?
Oh, it's about time to change because there are so many different industries. We for example, like the buy and sell house agency process, or we can talk about even experience in DMV. Those are perfect enterprise use cases exist today. But they're up to complete new change, right? So
you see the opportunity there?
We see the opportunities. And it's interesting, many are coming from young kids too. Not saying they are going to be the perfect founder to execute it, but the way they think about things are very different. Ask a different question, why can't it be this way or that way, right? So for example, I had a 3-hour conversations with a high schooler this weekend. So he was talking about how terrible the experience is for a college application. So college application, again, so it's so much information, very different choices, very difficult for parents and kids to collaborate. And most of all the career directions are changing. We don't know what we're going to be working on. The kids don't know what the career path would be. So it's a massive headache for everybody. And then for someone to actually deeply understand the process, and then they actually come out with completely new ideas, and they can execute it.
Are the check sizes changing on the early stages? I mean, some say it's cheaper to do a startup, but now you're seeing seed rounds at 100 million. Yeah. So what is going on here?
It's both. Yeah. I mean, you've got, you can do so much because you've got access to the models, right? And a lot of the AI companies, because of the amount of money that's gone into them, they're basically letting us use their products at negative margin for them. And so you can build something. I mean, there's a lot of talk about how many unicorns there'll be in the future that are just 10 people unicorns, or 5 people unicorns. So I think on the one hand, you've got that, but because there aren't a lot of barriers to entry and that there's so much potential competitive risk, you do want to build a bit of a war chest so that you can run fast, you can recruit great team members.
So I want to ask you guys a question because there's an old school saying in the venture world of, there's a pony in there somewhere, or that's a feature, not a company. And now we're in the world where one feature could be the company. So thoughts on that, because this is now, you mentioned the ability to start a company with 10 people, could be 100, a decade ago or 5 years ago. Now the go-to-markets are changed, but you still have to go to market, you still have to sell it.
Yes.
Right.
Thoughts on, there's a feature company dynamic, or there's a pony in there, because there's a lot of startups out right now in AI. Hundreds and hundreds of new companies being formed this year alone. Thoughts on survival rate slash is there a pony in there somewhere?
Yeah, that's why, as VC, we started in 2013. And then, so back then, Meta has this rule like DDD, data-driven decision making. So that's why, back then we were thinking we have to build our own tool. So as you mentioned, there is a lot of startup. They have very high valuation, and then they raise maybe like 2 million, 3 million, but they only have 18 months. After 18 months, they have to produce something, right? But what if they launch the product, nobody cares? But there's also breakouts. They already have like $1 million ARR, $5 million ARR, but nobody knows about them. So I think it's perfect for actually, investors to build our own system to track the performance. So out of our investments, we actually build this so-called ARM system. We can track them. So we're already looking at hundreds of companies, and then that we invested, and then there were 20 became unicorn. There was like 40 valuation between 100,000 to 1 billion. There is also like 60 of them.
In valuation or
in valuation. Okay. There are 60 of them we're tracking. They haven't raised their Series A, but their ARR is already over 1 million. But nobody else knows about them. So that's why we want to invest in YC demo day, post YC demo day, because we really wanted to actually have their data. Yeah.
Ron Conway used to have a strategy, spray and pray.
Yeah.
It was very effective at the time, yeah.
I mean, optionality-wise, Y Combinator has produced a lot of good outcomes.
Yeah.
Exactly.
We like to invest in company before they went to in our YC. That being said, I think there's interesting, like what Sue just said, is tracking the revenue, tracking the progress is really important. So I think today, many VC talk about the multiples and valuation, but we watch really closely where the revenue is going. Mm-hmm. So for us, the company we have invested, we see over 100x of revenue increase in just 2 years. So what we talked about before is how much money going in the company, the speed to revenue is completely changing today.
Yeah.
So what are you guys' investment thesis? Because one of the things we're tracking with this event here, Robotics and AI Leaders, is looking at the structural change. Because if you look at kind of what's that, you mentioned Meta, one of the things we've been saying, a little bit of a haymaker and a little bit over the top, is that the rich get richer and the poor become rich. But the middle kind of might get squeezed because you can punch above your pay grade with AI if you're a fast growing company, but if you're a big company, you get richer because you have more compute, you have more GPUs. So are we looking at a structural change where the rich get so big where they control the GPUs, which controls the AI? Do they foreclose the upside to the startups? And then startups, they're not going to sit around and taking it. They're not going to sit there and saying, going to let the big, I won't say proprietary, but back in the old days, if you were IBM, you had a proprietary system, the startups just would eating their lunch left and right. So the question is, what's your investment thesis, each of you, and how do you see some of the key structural changes that you're watching? I mean, that might flip the bid a little bit one way or the other.
Yeah, for us, so go ahead.
No.
Go ahead.
Oh, okay. So I think for us, because in the last 3 years, we foresee there's going to be a gold rush to building AI. So we believe in pick and shovels. So the last 3 years, we invest heavily in the software infrastructure to support that. Data infrastructure, compute infrastructure, orchestration. And then from there, I think the whole wave of development is now moving towards from building infrastructure, more of now in enabling AI builders. But what we're looking for, in addition to strengthen our leadership in AI infrastructure investment, is looking into what are the new AI native apps can make generational change. As Aileen pointed out, it's difficult, right? Because some are able to create value, but very few can capture the value for long term.
I mean, I think the big companies like Microsoft, Meta, they've got incredible talent, incredible resources, right? Low cost of capital, incredible access to GPUs. But historically, big companies, they do have, they've got people who are not going to be AI native, right? They're learning it. But I do think small companies who have a lot more at stake, they just historically are much better at seizing new opportunities and executing on very specific things versus a company that's got a very large revenue base, it's got a lot of existing customers, you've got a lot of legacy products that you may not want to disintermediate so quickly. And so I think it's wide open because if you think about security, right? You think about all the different things that are going to come up in terms of infrastructure needs as this ecosystem continues to proliferate. There is so much open ocean for startups to really, I think, crush it when it comes to competing with big companies.
Totally. I feel like Silicon Valley culture has always been here, never changed actually. So taking Meta as example, scale.ai. It was a startup before, right? So in the very beginning, it was a YC company, right? So it's not Meta, and Meta spent 143, billion, right?
Yeah, right.
So 14.3.
Yeah.
14.3 billion to actually,
By the way, that's a good argument
yeah.
for what Aileen was saying. Meta needs Scale AI's founder because
Yeah.
they're struggling internally
Exactly.
with their models. So
Exactly.
opportunities to come in and change the landscape because they look big on paper.
Yeah. But,
so I think Silicon Valley culture is still the same, right? So Google became AI first because of the acquisition of Android, and now is AI first because of acquisition of DeepMind. So I think for Amino, we felt like what's the investment thing for us from day one? It's always been data.
Yeah.
So
and speed matters too. Right now, speed game, Aileen, it's a whole nother dimension, the pace of play on all fronts, capital markets, startup entrepreneurship.
It's one of the interesting things. I'd be curious to see your take. I mean, I think this has always been the case, but this like quality and velocity of execution is critical. And so when you're meeting with these startup teams, you really want to understand what's their mentality around velocity and quality. Because there's so much new information, there's new models, there's new infrastructure, there's new ways to do things, and you need to back teams that are going to be constantly synthesizing that information and iterating on what they do at a very rapid pace. Like you can't ship once a quarter or once a month even. It's not fast enough anymore.
I think that's a great point. In fact, last week at the Databricks AI Summit, one of the things that came out of that was, across all generations, was the speed. That the quality and the evaluation of models at the picks and shovels levels are coming super fast because the agents are disruptively enabling the value.
Yes.
Not just search and doing retrieval augmentation generation, vector embeds, that's great, but the value is going to come in for where the top line is. So that's a validation of that. So I have to ask you guys, valuation comes up a lot, not just startup valuation. I was talking to a customer, they said, how do we value the project? Is it payback, discounted cash flows, net present value? Is it TCO? So the old school mechanisms of valuation come into play both on the customer side and the venture side. So since you guys see both sides, how do you value a $100 million GPU purchase at a seed level? Or, I'm making that up, but like,
those things don't go together generally.
But I mean, that could be a future where it's like, hey, I'm going to go all in. And you'd have to justify that investment.
I feel like, for Amino, we felt, because our investment theme has been data, so data as a mode and network effect as growth hacking strategy. So for us, we felt like the growth stage investors, they haven't, most of them, majority of them, they haven't actually changed their criteria. It's still 200% year-over-year growth. So coming back to the early stage, if this company is overvalued, and then 18 months later, they don't actually have any revenue. And then I think the growth stage investor, they normally will not pick this up, even though the demo is magical. So to us, it's very easy. Whether this company can collect data, meaning that whether this company can have some real revenue rather than vibe revenue.
Vibe revenue.
Vibe revenue, that was 2024, zero. But Vibe is moving to engineering. And that was the conversation I had with Jonathan Frankel at Databricks, chief scientist from Mosaic. He and I were talking about that the Vibe coding was great for the front end, but the engineering, getting back to engineering solutions, so that a lot of the AIs about this year is about going into next year. What are you going to engineer? And he used that word intentionally.
Interesting. So vibe coding actually is pretty close to my field as a professor at Carnegie Mellon. So at CMU, I teach massive engineering programs, and in the past, the students will be snapped away before graduation. But now I'm seeing more and more students are struggling to get internship because we don't need junior developers anymore. So there's a whole argument about is vibe coding completely replace junior engineers? Is vibe coding continue to get smarter and go into the field of intentional engineering later? I think that's an inevitable trend.
Vibe coding is when we used to go to the computer lab and hang out and socialize. I mean, it's a fun thing to do, and it creates propensity though. I mean, this is where I love vibe coding.
Yeah.
As that translates into ventures, how do you guys squint through that and saying, okay, natural talent, we're seeing some action there? Is it a...
It is really amazing. So there's a application that we're thinking about buying at Cowboy Ventures to help us model and manage our portfolio data. And it's like a 30, 40K annual ACV kind of thing. So, but it's not a like need to have, it's a nice to have. And so we said like, could we vibe code it, right? So we basically went into ChatGPT and said, write us prompts that we would put into Vercel or Cursor to build this application. Here are what the screens are gonna look like. Here's the kind of data we're gonna put in. Here are the logins, the authorizations, the level of permissions that we wanna have. And we basically, and then we cut and pasted the prompts into Vercel. We had an application in about an hour.
Yeah.
And so basically, cost us $0, maybe cost us $40, right? Versus $40,000. Like, I think that's kind of what's at stake for the software business in a lot of ways, where your software really has to add defensible value. You have to at least in the application layer, but also in the infrastructure layer, right? You need to understand your buyer, you need to understand their pain points, you need to understand how they're going to be evaluating the ROI and the re-up every year. They really have to be delivering true value, because right now we're in this like, I think the folks at Altimeter coined this term ERR, right? Experimental run rate revenue, right? Where a lot of AI companies right now, whether they are infrastructure, whether they're infrastructure or application layer, it's experimental. Everybody wants to try, even in the most conservative corners of your enterprise, like accounting, they want to try AI products, right? They've all gotten the memo from the C-suite, like we have to be embracing AI. They've read the Duolingo and the Shopify memos, like what are we doing? So you're having a ton of startups getting 4 to 10 logos from very interesting customers, right? That are all going to be up for grabs next year and reevaluated. Should I stay with this thing that I tried, or should I run to a new shining object? And so I think for a lot of the early stage companies, it's really critical that they are delivering that kind of value that's defensible.
When you guys see companies do that, because I think that's a great entrepreneurial thing, a lot of them don't have the experience to understand how to manage the customer.
Right.
And go-to-market, back in the old days, you'd have to hire a seasoned pro to come in, help with the go-to-market, the classic, hire a sales force. Now it's like, okay, you got beachhead. Do you understand what that means? Do the young companies understand that they're sitting on a gold mine?
Yeah.
I mean, that's an interesting, because they're like, okay, we got a customer, let's get 10 more. Do they lose sight of that, or they actually have an intentional mechanism to extract and kind of do the product work? Because the smart founders are going to the customers, they are getting them, and then doing the product work with the customer and working backwards.
So like taking Replicate as an example, which we founded after YC Demo Day, and then it was a great company. And then I think it's totally the beauty of a lot of Gen AI companies that they are a little bit PLG. So like Replicate, right? So you can just onboard and then without any kind of like in-person setting. So so that's the beauty of founders. The founder actually comes from tech giants. That kind of training actually equipped them with PLG SaaS.
Yeah.
So the founder of Replicate, MJ, so he used to work at the Meta. So definitely have a little bit experience definitely help.
Go ahead.
I think the enterprise, how we define enterprise customers are also changing as well. So at the end of the day, can the young founder speak the language of the customers? Really depends who the customers are, right? So I think, for example, the young gen, I've seen so far talk to Aileen about the high schoolers and college students.
Young guns,
Can high schoolers do enterprise sales?
They can actually, they're already sold.
They just go to ChatGPT,
they're
pretend I'm a
sold.
seasoned sales rep.
The question is whether parents allow them to actually drop out from college. That's actually due diligence question. But what's interesting is they deeply understand the problem, but when they're selling to today, also there's a prosumer approach as well, right? So you can actually get market traction, have consumer to use it. And then, for example, when enough students are actually using it, 50,000, 80,000, and you go to college, it's a much easier conversation.
My final question for you guys is disruptive enablement always is a discussion in these big waves. You see either a protocol or a shift. What would you see as a disruptive enablement? You mentioned MCP, and as a big surprise this year, as great organically community-grown ecosystem development that's kind of like,
Open source.
Yeah.
it's kind of like a consensus.
Open source,
Let's just get behind this. We all salute the flag.
Yeah,
We can
open
do
source.
more. Tooling is getting much easier to build. We're going beyond APIs. Is there a disruptive enabler that you see that's kind of creating gravity around the AI stack? I mean, platform engineering, that's Kubernetes is great. We cover that. That's come out of the organic community as well. Is there something that you see around this enablement that will create a step function trajectory change in the market for value creation?
I think there's a key thing when I see in the infrastructure layer is that we're going to continue to see the bottleneck of compute. So compute demand and consumption has went up over 100x in the last 3 years. And that's just because large language model, right? So we're talking multimodality, we talk about physical AI. So we're going to see is continued pressure on how much compute that we need, how efficient we can to scale the AI applications, but also how we can be energy efficient because we are hitting the bottleneck of energy. So I think what we have seen is some tons of research and experiments so far in those completely new foundational infrastructure will be quite interesting to watch.
Cool.
No, I mean, I think just the pace of evolution in the ecosystem, MCP is a really big one. I mean, DeepSeek is a big one. There will be more and more models, right? And more models tuned for specific, whether it's pharmaceuticals, for physics, for geospatial, right? And there will also be edge-based models. So you'll be able to have an on-prem model, a smaller model on your device if you don't have access to great Wi-Fi or if you have data that needs to be sequestered. Like, I think kind of like in a way how we don't think about how the cell phone networks switch us from tower to tower, like the call just works. Probably 3 to 5 years from now, the infrastructure will be switching you between whether it's cloud service providers, models, resources. So the efficiency of the cost and the leverage of the resources is going to be incredible and we won't even notice it.
Awesome.
Yeah, for us, we're seeing the real data flywheel. All this it's beautiful that the ChatGPT already, OpenAI already makes like over $10 billion ARR just by, all those subscription models. They haven't even, unlocked their so-called iOS App Store moment yet, right? So it's already making so much money.
Yeah.
It actually helped. So who is actually using those tokens? Startups. Yeah. Startups in all this there are two already very defined, and making totally real money. Like one is Cursor, Rapid, that kind of a code generation. And then second is marketing, MarTech. I went to this market conferences and everybody's saying that MarTech marketing people, they're losing their jobs, right? So it's got replaced, but in the meantime, there are new jobs for them. A lot of them, they actually have their own YouTube channels, all those prosumers. It's just amazing. They can just
more
work for
competition for you guys.
nobody, work for themselves, and they're making like $2 million a year.
You could be doing seed investments too, that creep into the disruptive.
Exactly. And the laboratories, pharmaceutical company, they're using this online agents to help them writing patents and writing papers. It's just all this numerous applications there. Yeah. So with MCP, one person unicorn, right?
What do you call that
Do you think
person?
there'll ever be a one person?
We need a name for that.
One person, 100 agents.
I guess it really is a unicorn.
Thousands of agents.
It's a uni.
So management skill sets is actually the key. So we have this youth program as well for all this Stanford students we're teaching. So we help them, rather than coding, we help them how to actually manage MCP agents.
Yeah, I mean, the entrepreneurial action's hot, the structural change is coming. We've kind of seen this movie before, but it looks different. The ending will be value creation, value extraction. Great insight. Thank you so much.
Yeah, hopefully it's not going to be like WALL-E where we're just floating around on lounge chairs when AIs are doing all the work.
I already see hosts that could be replaced too. I mean, my job hopefully is at risk. Thanks so much for sharing the insights, the investor perspective as investments in the hot startups is coming down the pike. You're seeing more and more action. The startups are out there. There's hundreds and hundreds of new startups being formed every year. In AI, of course, we're trying to track that on SiliconANGLE and theCUBE. I'm John Furrier. Thanks for watching.